the markets comes shortly after the Federal Reserve's announcement of a possible rise in interest rates earlier than expected. Cryptocurrencies are obviously also affected, with investment funds reducing their exposure to Bitcoin. Let's get started. In Bitcoin's weekly time frame, we can see that it has been quite a volatile week. In the week starting March 28th, we saw a doji candlestick with a bearish connotation, similar to hanging man candlestick. The week starting April 4th, we saw a full-bodied bearish engulfing candlestick, which wasn't quite a good sign, and continued into the week starting April 11th, which withstood in the zone between $38,400 and $39,200. Looking at this week's candlestick, we can see that the price continued to head towards the downside and touched approximately $38,400. That support also converges with the downtrend. If we take a look at this week's candlestick, we can see that it has touched an important part of the resistance located between $43,000 and $45,000 approximately, which is also where the 20-period moving average is found in the weekly time frame. We must highlight that this week is drawing a candlestick of indecision, but with connotations of an inverted hammer candlestick, even though the spike below is considerably long. If we see candlesticks closing below this incredibly important support zone, the price could go on to test the 200-period moving average. In the daily time frame, we can see that yesterday a considerably important movement was carried out. The price has gone on to look for the bottom of the downtrend, which marks these higher lows. We can see that on April 11th, it touched the trend line at a moment in which traditional markets also fell. Until April 17th, we saw a micro range between $41,000 and $39,500, and just in the opening of the week, April 18th, the price rejected the bottom of the downtrend and turned to the upside with a large body candlestick, indicating significant buying interest in the zone. On the 19th, it continued its bullish movement toward an important resistance zone between $41,000 and $42,000 approximately. We can see how it attempted to continue heading upward, but on April 20th, it rejected that zone, displaying selling interest. Yesterday, April 21st, all traditional markets opened with a bullish movement, leading its price to $43,000. With the deployed moving averages, we can see that over the last few days, the price has been moving within a small range, using the resistance at $41,500, which converges with the 100-period moving average. On the 19th, it beat that 100-period moving average, and on the 20th, a bullish movement was carried out, which was rejected at the 50 and 20-period moving average convergence, although it did close above the 100-period moving average. Yesterday, however, it surpassed the convergence between the 20 and 50 moving averages until reaching $43,000, after which the price witnessed a pullback and closed below the 20, 50 and 100-period moving averages at the same time as risk assets in traditional markets due to macroeconomic situations. If we start seeing candlesticks closing below $39,500 approximately, which forms an intermediary support zone, and also the trend line with the higher lows is found, the price could go on to test 0.78 Fibonacci located at $37,800. In turn, if we start seeing candlesticks closing above the important resistance zone where the 20 and 50 and 100-period moving averages are found, it could go on to test the $44,000 zone. In this chart, we can clearly see that the price has gone on to test different levels at which Fibonacci's extension is found. The Fibonacci retracement forecasted from the low of $33,000 to the high of $48,000. Yesterday, it touched 0.38, meaning 38% of the retracement, and rejected it with force, closing at 0.50 Fibonacci, therefore 50% of the retracement. As we can see, there's a battle between 0.50 and 0.38. In the SP 500 chart, we can see that on the 18th, 19th and 20th of this month, the index moved towards the upside until reaching an important zone in which three moving averages converged. However, yesterday the price touched the 0.50 Fibonacci zone, losing all averages. If we take a close look, the structure here is similar to that of Bitcoin, as the 0.50 acts as a relevant support on which the movement is now leaning. If we now start losing the 4,300 point zone, we could start seeing a fall in the cryptocurrency market, given both markets go hand in hand. According to the Fear and Greed Index, we can see that the markets are currently in a state of fear as a result of the uncertainty being experienced. In this table, we can see that Luna Foundation Guard continues to acquire bitcoins, as over the last few days, different purchases have been carried out at different price rates. If we take a look at the amount of Bitcoin in exchange reserves, we can see that it continues to reduce, which could indicate that holders of this cryptocurrency do not intend to sell their assets. As of now, there are 2.5 million Bitcoins in exchange reserves. But it's not all good news. The data reflects that the investment funds this month have reduced their exposure to Bitcoin by 12%. In a macroeconomic context, the data is incredibly worrying. In the United States, year-on-year inflation in the month of March shot up until reaching 8.5%. As we saw, the main reason behind it is energy prices, as they've increased roughly by 32%. But the most impactful change is that of oil, as it has increased by 70%, while gas fees have risen by 48%. And in Europe, data is not exactly relieving. The consumer price index is located at 7.4%, and one of the goods that has been the most significant increase is housing, which has risen by 9.4% in the Eurozone. The President of the Federal Reserve, Jerome Powell, yesterday discussed interest rates and that there is a possibility of increasing them over the month of May, in addition to doubling them, reaching 0.50%. In addition, the reduction of the Fed's balance sheet by 95,000 million per month will also have an impact on the growth of the economy. In Europe, on the other hand, it seems as though the rise in interest rates will be postponed. Luis de Guindos, Vice President of the Central European Bank, suggests that the cessation of assets could be in July. He also suggests that the rise in interest rates could depend on the data and could potentially take place in July or even later. In short, it will depend on the economy's evolution. Something to take into account in regard to the cryptocurrency market is that the International Monetary Fund, in particular the General Director, states that the crypto ecosystem must be regulated to guarantee the stability of the monetary policy. The traditional and currency markets are more and more in sync. Over the last few days, it seems as though both of them have discarded decisions that will soon be taken by the Federal Reserve and the Central European Bank. Until then, volatility and uncertainty lead the way in the macroeconomy and, of course, the cryptocurrency market.